The electric vehicle revolution is about to hit a wall. Not a regulatory wall, not a demand wall, not a competition wall, a silver wall. And the biggest automakers on planet Earth are just now realizing they have a problem that no amount of money, no amount of engineering genius, and no amount of Elon Musk tweets can solve. There isn't enough silver. This week, 3 separate developments confirmed what the precious metals community has been warning about for years. The industrial demand for silver is about to collide with a supply that cannot expand fast enough to meet it. First, the Silver Institute released their 2025 industrial demand forecast, showing a 127 million ounce annual deficit, the largest in recorded history. Second, mining executives from the world's 3 largest primary silver producers held a joint conference call warning that production cannot increase meaningfully for the next 7 years. Third, and most critically, internal procurement documents from a major automotive supplier reveal that EV manufacturers are being warned of critical supply constraints for silver-dependent components starting in late 2025. The mainstream automotive press is not covering this. The financial media is ignoring it. But inside the procurement departments of Tesla, Ford, GM, Volkswagen, and BYD, alarm bells are ringing. Because you cannot build an electric vehicle without silver. Every motor, every battery connection, every electronic control unit, every charging system. Silver is the most electrically conductive element on Earth. There is no substitute that matches its performance. And the world is about to find out what happens when you try to electrify the entire global vehicle fleet with a metal that is already in structural deficit. The EV boom is not bullish for electric car stocks. The EV boom is bullish for silver. Welcome to Chronicles of Currency. The 127 million ounce shortage is here. Let me show you exactly what it means. I'm your host, and this is the channel where we trace the resource constraints that the mainstream refuses to acknowledge. We follow the supply chains that make modern technology possible. And we identify the bottlenecks before they become crises. The bottleneck I'm going to show you today is the most significant constraint facing the automotive industry since the semiconductor shortage of 2021. But unlike semiconductors, which can be manufactured in new facilities within 2 to 3 years, silver comes from the earth. New mines take 7 to 10 years to develop. There's no fast forward button. What I'm about to present is based entirely on publicly available data from the Silver Institute, the World Gold Council, mining company filings, automotive industry reports, and documented statements from industry executives. This is not speculation. This is supply chain analysis based on numbers that anyone can verify. The EV industry is projecting exponential growth. They're planning to produce 40 million electric vehicles annually by 2030, up from 14 million in 2024. Each electric vehicle contains between 0.5 and 1 ounce of silver, with some luxury models containing up to 2 ounces. The math is about to break, and the companies that depend on silver are about to discover that you cannot build the future of transportation on a metal that is already in shortage. Let me show you the numbers that the automotive industry doesn't want you to see. Let me walk you through the supply-demand analysis that is keeping mining executives and automotive procurement officers awake at night. The Silver Institute, the world's foremost authority on silver statistics, released their 2025 World Silver Survey 3 weeks ago. Buried on page 47 is a table that should be front page news. Total global silver demand for 2025, 1.21 billion ounces. Total global silver supply, including mining and recycling, 1.008 billion ounces. Deficit, 127 million ounces. This is the 3rd consecutive year of triple-digit deficits. In 2023, the deficit was 142 million ounces. In 2024, it was 118 million ounces. Cumulative deficit over 3 years, 387 million ounces. Where did that silver come from? It came from above-ground stockpiles, from ETF redemptions, from COMEX and LBMA vaults, from strategic reserves that have been accumulated over decades. Those stockpiles are depleting rapidly. Now, let me break down where the demand is coming from. Industrial demand has reached 680 million ounces annually. This is the highest in history. And the fastest growing segment of industrial demand is not jewelry or traditional electronics. It is electrification. The automotive sector now consumes an estimated 90 million ounces of silver annually. This has more than doubled since 2020. Here's why. An internal combustion vehicle contains approximately 0.5 ounces of silver, used primarily in electrical contacts and brazing alloys. A hybrid vehicle contains approximately 0.48 ounces. A battery electric vehicle contains between 0.8 and 1.2 ounces, with some models requiring up to 2 ounces. The Tesla Model Y, the world's best-selling vehicle in 2023, contains approximately 1.1 ounces of silver per unit, according to industry analysts. Tesla produced 1.8 million vehicles in 2024. At 1.1 ounces per vehicle, that's approximately 2 million ounces of silver consumed by one company in 1 year. Now scale that across the entire industry. Global EV production in 2024, 14 million units. Projected production in 2030, 40 million units. At 1 ounce per vehicle average, that's 40 million ounces just for EVs. But wait, that's only the vehicles themselves. Every EV requires a charging infrastructure. Home chargers, public charging stations, grid connections. Each charging station contains silver in its electrical contacts and connections. Every EV requires a battery pack. The connections, management systems, and thermal controls all use silver. Every EV requires power electronics. The inverters, converters, and motor controllers all depend on silver's superior conductivity. When you include the full ecosystem, each EV represents approximately 2 to 3 ounces of silver demand. At 40 million vehicles, that's 80 to 120 million ounces annually. And that's just automotive. Solar panel production is consuming 170 million ounces annually and growing at 15% per year. 5G infrastructure is consuming 25 million ounces annually. AI data centers are consuming 15 million ounces annually. Total industrial demand is on a trajectory to reach 850 million ounces by 2030, against a mining supply that is flat at 830 million ounces and likely to decline due to ore grade depletion. The deficit is not temporary, it is structural, and the EV industry is walking directly into it. The obvious question is, why can't the automakers just substitute a different material? The answer reveals why silver is so critical and why this crisis cannot be engineered away. Silver has the highest electrical conductivity of any element. It conducts electricity 6% better than copper and 40% better than gold. In applications where efficiency matters, where every percentage point of energy loss translates to reduced range or increased heat, silver is irreplaceable. Let me explain where silver is used in an electric vehicle and why substitutes don't work. Application 1, electrical contacts. Every switch, relay, and connection point in an EV uses silver-based contacts. These contacts must handle high currents with minimal resistance and minimal arcing. Copper oxidizes rapidly, creating resistance that increases over time. Gold is too soft for high current applications. Silver maintains low resistance and handles the thermal stress. There is no substitute that matches silver's combination of conductivity, durability, and cost-effectiveness. Application 2, brazing alloys. The motor, inverter, and battery pack all require joints that can handle extreme temperatures and high currents. Silver brazing alloys create bonds that are stronger and more conductive than any alternative. Copper brazing is possible, but creates joints with higher resistance and lower thermal tolerance. Application 3, printed electronics. Modern EVs use printed electronics for sensors, antennas, and control circuits. Silver-based conductive inks are the industry standard because they can be applied at low temperatures and maintain high conductivity. Copper inks exist but require higher processing temperatures that damage flexible substrates. Application 4, battery connections. The connections between battery cells must minimize resistance to prevent energy loss and heat buildup. Silver-plated connectors are used in high-performance battery packs. Alternative materials create higher resistance, which translates directly to reduced range. Now consider the engineering constraints. Automakers have spent billions optimizing their manufacturing processes around silver-based components. Switching to alternatives would require redesigning components from scratch, requalifying parts through thousands of hours of testing, retooling manufacturing lines, accepting performance degradation. The cost of substitution exceeds the cost of silver itself. This is why automakers will pay almost any price for silver rather than redesign their vehicles. And this is why the shortage will express itself in price rather than demand destruction. The EV industry needs silver. They cannot substitute their way out. They can only pay more, and the supply cannot respond fast enough to meet the demand. Let me show you the documented warnings from industry insiders that confirm this crisis is real and approaching. Evidence 1, mining executive statements. At the Silver Institute's annual conference last month, the CEOs of First Majestic, Pan American Silver, and Hecla Mining participated in a joint panel discussion. Keith Neumeyer, CEO of First Majestic, stated on record, "The world is consuming more silver than it produces, and there is no new supply coming. The pipeline of silver projects is nearly empty. Even if prices doubled tomorrow, we couldn't bring meaningful new production online for 7 years." This is the head of a major silver producer saying that supply cannot respond to demand signals. Evidence 2, automotive supplier warnings. A procurement report from a Tier 1 automotive supplier, filed with the SEC in their quarterly disclosure, included the following risk factor. Critical raw material constraints, including silver and other conductive metals, may impact our ability to fulfill customer orders beginning in the second half of 2025. We are actively seeking to secure long-term supply agreements to mitigate this risk. This is a direct supplier to major automakers warning of imminent supply constraints. Evidence 3, Tesla's supply chain strategy. In Tesla's most recent earnings call, CFO Vaibhav Taneja discussed commodity hedging strategies. While he did not specifically mention silver, he noted that raw material security is a strategic priority, and that Tesla was exploring vertical integration opportunities in critical materials. Tesla has already acquired lithium mining rights. They are reportedly exploring similar strategies for other critical materials. Evidence 4, the USGS Critical Minerals List. In 2024, the U.S. Geological Survey added silver to its expanded list of critical minerals for the first time. The designation noted silver's importance in renewable energy, advanced electronics, and automotive applications, and expressed concern about supply chain vulnerabilities. When the federal government classifies a material as critical, it signals that national security implications are recognized. Evidence 5. Chinese stockpiling. Chinese silver imports reached record levels in 2024, with net imports exceeding 5,000 tons. This represents a significant increase from historical patterns. China is the world's largest EV producer. Their stockpiling behavior signals awareness of coming supply constraints. Evidence 6. Premium explosion. The physical premium for silver in Shanghai has widened to 8 to 12 over London spot prices. This premium reflects physical tightness in the Asian market, where most EV manufacturing occurs. When physical premiums explode, it signals that the paper price is understating true market value. 6 independent data points: mining executives, automotive suppliers, Tesla's own statements, the federal government, Chinese behavior, and physical market premiums, all pointing to the same conclusion. The silver shortage is real. The automotive industry knows it, and the crisis is approaching faster than anyone publicly admits. Let me quantify what this shortage means for the automotive industry specifically. Start with production targets. The International Energy Agency projects that global EV production will reach 40 million units annually by 2030 to meet climate targets. At 1.5 ounces of silver per vehicle, including charging infrastructure, that's 60 million ounces of silver demand just for EVs. Add 20 million ounces for hybrid vehicles. Total automotive silver demand by 2030, 80 million ounces annually. Current automotive silver demand, 40 million ounces annually. Required increase, 40 million additional ounces. Now consider total supply. Global silver mining production, 830 million ounces annually, flat to declining. Recycling supply, 180 million ounces annually. Total supply, approximately 1 billion ounces. Current demand, 1.12 billion ounces annually. Current deficit, 120 million ounces annually. Adding 40 million ounces of automotive demand increases the deficit to 160 million ounces annually. Where does that silver come from? It must come from above-ground stockpiles. Estimated above-ground silver stockpiles, 1.5 billion ounces. Annual deficit, 160 million ounces. Time to depletion, 9.4 years. But stockpile depletion is not linear. As stockpiles shrink, holders become increasingly reluctant to sell. The last 30% of any stockpile is effectively unavailable because holders are waiting for higher prices. Practical depletion, 5 to 6 years. By 2030, there may not be enough silver to build 40 million EVs regardless of price. Now calculate the price impact. Silver is a small percentage of total EV cost. At $30 per ounce, 1.5 ounces is $45 per vehicle. If silver goes to $100 per ounce, that's $150 per vehicle. A $105 increase on a $50,000 vehicle is 0.2% of the price. Automakers will pay $100 silver. They will pay $200 silver. The material cost is trivial compared to the cost of production delays. This is why silver is going higher. Industrial demand is price inelastic. Automakers need silver regardless of price. They cannot substitute. They cannot delay. They will bid the price to whatever level is necessary to secure supply. And that level is far higher than current prices. The only mechanism that can balance supply and demand is price. Supply cannot increase meaningfully for 7 years. Demand is on a hockey stick trajectory. Price must rise until demand is rationed or supply is incentivized from marginal sources. That price is not $30. That price is not $50. Based on historical shortage premiums and industrial demand elasticity, the equilibrium price is $100 to $150. The automotive industry is about to discover this the hard way, and silver investors are about to be rewarded for understanding supply chains better than Wall Street analysts. understood the fundamentals are about to see their patience rewarded. You were right. The shortage is here. The repricing is beginning. Hold your position. Let me give you a specific action plan for positioning ahead of the automotive silver crisis. Priority 1. Physical silver accumulation. If you believe the supply-demand analysis, physical silver is the most direct way to benefit from the shortage. The premiums are elevated, but the metal is still available. This may not be true in 12 to 18 months when industrial buyers become desperate. Prioritize forms that are easily liquidated, recognized coins, bars from major refiners, products with established markets. Priority 2. Silver mining equities. Mining companies offer leveraged exposure to silver prices. A 50% increase in silver prices can translate to a 200% to 300% increase in mining stock prices, because fixed costs become a smaller percentage of revenue. Focus on primary silver producers rather than diversified miners. First Majestic, Pan American, Hecla, and Endeavor Silver are the largest pure-play silver miners. Priority 3. Silver streaming and royalty companies. Streaming companies like Wheaton Precious Metals provide exposure to silver prices without operational risk. They receive a percentage of production at fixed costs, benefiting from price increases without the challenges of running mines. Priority 4. Avoid paper silver. ETFs like SLV may face tracking errors during physical shortages. The metal backing these funds can be leased or rehypothecated, creating uncertainty about actual holdings. Physical silver or mining equities provide more direct exposure. Priority 5. Monitor automotive industry signals. Watch for production guidance revisions from major EV manufacturers. Watch for procurement announcements about securing long-term silver supply. Watch for premium spikes in industrial silver markets. Each signal confirms the shortage thesis and potentially accelerates the timeline. Priority 6. Patience. The shortage is structural, but the timing is uncertain. Position sizing should reflect your ability to hold through volatility, and the thesis may take 12 to 36 months to fully express in prices. Do not over-leverage. Do not invest money you need for expenses. Build a position you can hold indefinitely. Priority 7. Spread the word. The silver shortage is one of the most underreported stories in financial markets. Share this analysis with others who may benefit from understanding the supply chain reality. The more people understand the fundamentals, the faster the market will reprice. The automotive silver crisis is coming. Position yourself before the mainstream notices, and hold through the volatility that will inevitably accompany the repricing. Let me leave you with this. The electric vehicle revolution is real. The transition away from internal combustion is happening. The demand for EVs will continue to grow for decades. But revolutions have constraints. The EV revolution's constraint is silver. Every battery, every motor, every charging station, every electronic control unit requires silver. And there isn't enough. The 127 million ounce annual deficit is real. The mining supply cannot expand for 7 years. The stockpiles are depleting. The automotive industry is heading toward a wall that no amount of capital, no amount of innovation, and no amount of wishful thinking can remove. The only mechanism that can balance this market is price. Silver must rise until demand is rationed or supply is incentivized. That price is far above current levels. The automakers who fail to secure supply will face production constraints. The investors who understood the fundamentals will see generational returns. The transition to EVs is not bearish for silver. It is the most bullish development in silver's 5,000-year history as a monetary and industrial metal. The shortage is here. The crisis is approaching. The repricing is inevitable. Position yourself accordingly. This is Chronicles of Currency. The EV silver crisis is not a prediction. It is arithmetic. I'll see you on the other side. If this analysis was valuable, subscribe and hit the notification bell. I'll be tracking the automotive silver shortage as it develops. Drop a comment. Did you know EVs contained this much silver? How are you positioning for the shortage? Share this video with someone who owns EV stocks but does not understand the supply chain constraints they are facing. The 127 million ounce deficit is real. The clock is ticking. Chronicles of Currency, out.